welcome. You are watching Focus On, and I am Zanele Morrison. Scores of U.S. and African political, business, and civil society leaders have gathered at the AGOA Business Forum taking place in Johannesburg to make deals and consider how to make the African Growth and Opportunity Act work better for the continent. Joining me to speak about the benefits of this trade agreement for Africa and what it has in store for Africa and Standard Bank is Kenny Fihla, the Chief Executive Officer, Corporate and Investment Banking. Kenny, thank you so much for joining me for this conversation. You are the lead sponsor for AGOA, and as the biggest lender with presence in over 20 countries, what is the significance of this trade agreement for you as a business and for Africa as a whole?
Well, thank you for having me, Zanele. We are very, very happy to be associated with AGOA. We see this as a very important opportunity for Africa to continue to export to the US, to increase its own production across a whole variety of sectors. And when one look at what was achieved in 2022, exports totaling nearly $10 billion, which is a significant increase from the COVID days. Whilst that is still concentrated in few sectors, we hope to expand that as well as to increase the exports that come from all the member countries.
So in addition to that, AGOA has an even added importance considering what is happening globally, as well as the continental economic environment. Could you expand on what this importance is for us?
It is extremely important. We are bombarded by negative news arising from all the challenges that the globe is facing at the moment. And to have an equation to engage with the U.S. authorities and business leaders on the potential opportunity for further economic growth, expansion of production, and access to one of the largest markets in the world is very significant for Africa. It is something that signals a positive attitude towards the continent, an opportunity that the continent must seize, but through AGOA, would also be able to engage with some of the internal issues that we want to address within the continent to help grow our economies on an accelerated basis, and at the same time remove whatever challenges and obstacles that may hinder our ability to export to the developed world. This is also a very useful stimulus to the African Continental Free Trade Agreement, because for Africa to be able to trade with itself and increase intra-Africa trade, it means we need to be able to expand production capacity, modernize, attract skills, and improve the quality of the goods that we export. And at the end of the day, AGOA helps us to achieve that, which then lays a very, very firm foundation for us to be able to trade within ourselves and to up the level of output and the quality of the goods that we produce within the continent. We think the opportunity that is presented by these two things is huge and may transform our economies and ultimately lead to better development and better life for the people of Africa.
We definitely hope for those outcomes. But let's come back to Standard Bank. Standard Bank does support US-Africa trade and investment. Could you elaborate in particular to any deals that demonstrate Standard Bank's ability to service both these US and Africa clients and what the ultimate benefit is as well to the African economy?
We operate in 20 African countries. We've got a representative office in the US, and as a consequence of our footprint, we bank the majority of the multinationals from the US that are operating within the African continent. And that enables us then to provide facilities to them to enable the cross continental payments between Africa and the US and vice versa. It also helps us to help clients structure their own deals, the investment into their own capex expansion, which would enable the production of goods that ultimately are exported to the US. And we'll continue to partner with clients across a whole variety of banking services that we provide. For example, we bank 5 of the 7 motor manufacturers that are located in South Africa. Whilst they may not need trade finance because of just the size of their balance sheet, the credibility of those institutions, nonetheless, the banking services that we provide to them makes it possible for them to be able to transact with their clients in the US. And we'll continue to seek to find new opportunities to strengthen that relationship with our clients and look at what are the additional products that we can provide to them to increase their own production capacity and improve their competitiveness at the end of the day. Because for African companies to be able to export to the US, not only should they be part of AGOA, or the country should be part of AGOA, but they also need to produce good quality goods. They ought to be competitive, and those goods ought to be priced in a manner that makes it easy for US consumers to want to buy those goods. And it is our role, therefore, Standard Bank, to partner with clients and enable that where possible, we can assist them to achieve those objectives.
Let's look at exactly that last part that you talked through, the AGOA agreement. It will come under review again in 2024. And some detractors say Africa wants to see the rules around AGOA become a little bit more user-friendly. Which ways do you think AGOA can be improved, and will that be under discussion during the next day or two?
I think there are a number of ways that can sort of be looked at to improve AGOA. I will start with what I think ought to be done by African countries themselves. Ultimately, US customers will buy what they consider to be good quality goods that are competitive. And we've got the responsibility to improve our own production, to modernize our production processes, and to expand the range of goods and services that can benefit through AGOA. That is dependent entirely on the African countries themselves. Of course, they need to create conditions that make it possible for them to attract investment, the necessary capital and the necessary skills to be able to modernize and expand their own economies and production. On the US side, there is no doubt that some of the conditions tend to restrict what African countries are able to export, the quantity of those exports. But there is no country that will allow people to come into their markets without also insisting on certain conditions that they think are important. But it is through dialogue and engagement that we think there is scope for improvement on both sides. And ultimately, if we all agree that AGOA is in the interest of both the US and Africa, because the US will have access to good quality and well-priced goods that are coming from the African continent. And they'll also be contributing meaningfully towards the development of a continent that is least developed, whilst at the same time, Africa is able to grow its own economy, modernize it, and improve the quality of life of its people. Those two continents are joined at the hip and have a shared objective to see AGOA succeed. And I think whatever improvement ought to be done, they're likely to be arrived at with a robust conversation, naturally. But at the end of the day, it will be in the interest of both continents to resolve those issues and expand on the impact and the potential benefits that AGOA can bring.
South Africa is already dealing with quite a lot, though, considering that we're navigating between the conflicting world powers from the East and the West. How can we continue to pull off and improve these balancing of economic interests? It seems rather a huge, daunting task.
It is complicated for developing countries and countries like South Africa in particular to have to navigate the complex global politics, whilst at the same time act in a manner that is in the interest of your own economy. But we think it is something that can be done. The commodities, the minerals, and the potential that Africa offers is required globally, irrespective of whether it is countries in the East or the developed countries of the West. They require access to what Africa has to offer. Africa must position itself to be able to offer those to both markets in a manner that is non-partisan and in a manner that is driven by economic and commercial imperatives. And it is that line that Africa ought to tread carefully. Naturally, politicians will have their own political beliefs, their own policy objectives and inclinations, but we do not think that if that sort of ideological leaning is exercised responsibly, it will impact negatively on the ability of Africa to sell to the rest of the world, whether it the Eastern countries or the Western countries, because these commodities are required. And in any event, these two regions also trade, between each other. And there's no reason, therefore, why Africa should be expected to only focus on one region of the world and not take full advantage of opportunities that are presented by both the West and the East.
Definitely. Let's also tap again into the AfCFTA. Are we starting to see the benefits accruing? And how will it benefit AGOA or vice versa?
We are starting to see some baby steps, as in the modernization of the processes related to import duty and i.e. the taxes that are imposed on imports by the respective countries. But that is just one obstacle. We think that free trade within the African continent will only take root and be meaningful if there's also free movement of goods and people, because ultimately taxes on their own are not the only obstacles to Africa trading with itself, but it is the inability of people and goods to move freely that is a major hindrance. And secondly, the logistics infrastructure to be able to move goods from the DRC to South Africa, or for people to travel within Africa, that logistical sort of system is still underdeveloped. And as a consequence, many people have to go to Europe, even though they're traveling from one African country to the other. They need to leave Africa to connect elsewhere to be able to come back to Africa. I think those bottlenecks just make it way too expensive and inefficient for Africa to trade with itself. And it is those sort of things that also ought to be resolved if we are to see an improvement in the economic performance within Africa and ultimately the full realization of the objectives of the African Continental Free Trade Agreement. If we're able to address these issues, I think it also puts Africa in a far more better position to export more to the outside world and to the US in particular, because we'll be improving our own productivity, improving our own efficiency, sorting out logistical challenges that makes it difficult for us to move things efficiently and be effective, therefore, in the delivery at the back of the contracts that would enter with the outside world. So whatever you do for the African Free Trade Agreement, there is no doubt that it will have a massive positive impact on the ability of Africa to take full advantage of the benefits that flow from AGOA. So I think the two are interrelated in many respects, given that the underlying issues that must give rise to their success tend to be similar.
The challenges are unimaginable and they seem so easy to fix. But I do hope that we make strides, and maybe you and I, Ken, in the next 10 years can see a marked difference in the continent's ability to trade with one another. But thank you so much for your time today. It was definitely very meaningful, and wishing Standard Bank and yourselves a good conversation and deep conversations at AGOA. That's how we wrap up today's conversation. Thank you to my guest, Kenny Fihla, Chief Executive Officer, Corporate and Investment Banking at Standard Bank, for sharing his insights into the AGOA Business Forum. From me, Zanella Morrison, it's goodbye for now.